Hello, and welcome to the BioSyent Inc. Q1 2014 results presentation. My name is Rene Gorham, and I'm the Chairman and CEO of BioSyent Inc. I'd like to start with our legal disclaimer, just to remind the listener that this presentation is for information purposes only, and no stock exchange has either approved or disapproved of the information in this presentation. It does include forward-looking statements, and BioSyent undertakes no obligation to update any actual results if they differ from some of the forward-looking statements in this presentation. So I'd like to start with a slide outlining our top-line sales results by quarter, going back through 2011 through 2014. So in the most recently ended quarter, March 31st, 2014, our sales reached just under 2.5 million, 2,000,448. That represented a 59% increase compared to the year ago quarter 2013 ending March 31st. And tracing back to 2011, you can see a fairly sharp growth curve. We were able to maintain that growth consistently now over the last 3 years. And over that period of time, using 2011 as a base year, our compound annual growth rate in Q1 has been 72%. So I'd like to talk about a few of the growth drivers for that strong first quarter. FeraMAX 150. Unit sales were up 60% versus Q1 of 2013. Obviously an important driver of growth there. For FeraMAX 150, our first international customer who purchased in 2013 came in for a repeat purchase in the first quarter. And the Cathogel in our hospital products unit had sales up on a unit basis of 161% versus Q1 2013. Those were really the three key elements that drove growth in the first quarter. Not necessarily a driver of growth, but worth mentioning here that we have a large legacy product customer who typically orders our non-chemical grain insecticide in the first quarter every year. It's kind of historical. That order this year slipped in. It's a starting order. That order slipped into the second quarter this year, so typically received in March, received in April this year, and the last time I checked, that order will actually ship this week, so in the middle of May. So when you're looking at our MD&A results, you'll see a kind of a lower than normal legacy sales, and that will have normalized in the second quarter. Some activity during the quarter. We announced the in-licensing of a new gastrointestinal health product. This was together with an existing European partner, our third partner from Europe in terms of partner relationship for products. And it is the same partner as the women's health product, which we are preparing to launch in the second quarter. More information on that, stay tuned over the next few weeks. The new gastrointestinal health product is already approved by Health Canada. It is complementary to some existing promotion targets that we have with existing products. That is, we do call on some of those doctors today that we will be promoting this new product to. And we've already started preparation for a Q4 2014 launch. We're in the production queue, and so we expect to be announcing more detail on that as the year progresses, and specific product information somewhere out towards the fourth quarter. We recruited and trained 3 new medical sales representatives in the quarter, and we also hired a new marketing manager in preparation for the Q2 women's health product launch and the 2 new urgent care products that we have in that are pending Health Canada approval. So this individual actually started at the very beginning of the year, just after New Year, and has been working hard on prepping for the women's health product launch, and will also be supporting the new urgent care products. And finally, as mentioned in previous news releases, BioSyent was named to the TSX Venture 50 ranking of the top performing companies. And of note there that we were the only such company named for 3 consecutive years. So out of 2,100 TSX Venture listed companies, we're the only to have been named for 3 consecutive years, ending 2014. So I'll talk a little bit about our net income before tax. It's our operating profit. You'll recall in previous presentations, I've taken pains to explain some changes in tax and tax expense. So this would be really the first quarter where we're now talking apples to apples as opposed to apples to oranges. So this has been a key performance indicator for us to measure how we're doing in our business and how our business is progressing. So once again, looking back over the last 4 years, the first quarters of the last 4 years, you can see a sharp acceleration in our profit before tax. In the quarter ended March 31st, 2014, our PBT reached $687,000, and that represented an increase of 43% versus the first quarter of 2013. We've also been reporting on our progress on our pharmaceutical business. So tracking back to 2009, we can now report that we've consistently and on a sequential basis grown our pharmaceutical business for 18 consecutive quarters. Sales in pharma reached $2.34 million in the first quarter of this year. Looking back over the last 12 months, so the last 4 quarters, we have a compound quarterly growth rate of 16% sequential. And if you look at Q1 14 versus Q1 13, our pharma sales were up 79% versus year ago period. We've been talking over the last couple of years about our revenue mix changing from a legacy business, bio-friendly insecticides, to pharma. That continued in this quarter, but just take you back to what I mentioned a couple of minutes ago, where we had a large legacy product order slip into the second quarter. So that revenue mix is slightly skewed because of that, but the trend continues. In the first quarter, pharma represented 96% of sales and legacy 4%. We expect, obviously, with that order that we received in the second quarter, things will kind of more normalize. However, that trend will continue, and I expect by the end of the year, the revenue mix will be expressed more in the 6, 7, 8% range legacy, and the balance in pharma. And probably by the end of this year, we won't be reporting on a mixed basis anymore. On the next slide, I want to talk a little bit about net income after tax in the 3 months ended March 31st. So once again, going back to 2011 and watching the progression over the last several years. In the first quarter of this year, our net income after tax reached $511,000, representing a 49% increase versus the year ago quarter. And what's important to note here is that the first quarter is traditionally, both looking at revenue, pre-tax profit, and net, is that our first quarter is typically our softest quarter of the year. That's driven by a couple of factors. One is, in the first quarter, legacy business doesn't contribute much. And of course, we've had a growing pharma business, so we've been growing every quarter, and as the year progresses, the pharma business has been contributing more. So if you look back historically over the last several years, 3-4 years, you'll see that Q1 is typically our softest, and the business continues to progress as the year progresses over the following quarters. So we're pleased with the 49% net income after tax growth versus last year, and is a sign of the trend that we're on. On the next slide, look at our balance sheet. A couple things to point out there. This just shows you our balance sheet snapshot, March 31, 2014, December 31, so the immediately preceding quarter, and then the year ago, December 31, 2012. Of note there, our cash position went down from $4.38 million to $3.79 million in the most recently completed quarter, and that is almost entirely a function of tax payments. So as we switch to being essentially tax expensing and tax paying, We were making progress payments on our tax payable, but we were also accruing, and we had quite an amount of cash accrued on December 31st for tax payment. That payment was made. Those payments, I think a couple were made in March, and that even though we had a cash flow positive quarter from a operating perspective, brought our cash position down on March 31st versus December 31st. We continue to be debt-free, both short-term operating line and long-term. So debt is at zero. We remind people that we have access to an operating line of credit with the Royal Bank of Canada. I think now it's been in place for about 3 or 4 years. We've never borrowed against that, but it is available if we need it. Total equity now has progressed over the last couple of years, I guess. Over the last 15 months, from equity in December 31 of 2012 of $2.83 million to March 31, 2014 of $5.45 million total equity in the business. So progressing well, and overall a pretty solid balance sheet relative to the size of our business. On the next slide, I wanted to walk through a couple of points regarding our operating expense. We continue, as we've grown our business, both top line and profitability as we've moved forward. We've always been very disciplined in how we manage and how we allocate resources. That is not changing any time that I can think of, and so I just want to report a little bit about what happened in the first quarter. You'll see that our selling and marketing expense grew 79% versus the year ago period. This is in contrast with an overall revenue increase of 59%. So a couple things to mention there. First of all, that is in line with the growth of our pharma business, and most of our selling and marketing expense is in support of the pharma business. Not all of it, but most of it, and certainly in the first quarter, a lion's share, a very disproportionate amount, would be selling and marketing for pharma. And so really the investment there in selling and marketing is to continue to drive sales growth, and it does include some preparation for our women's health product launch in the second quarter. That product is sitting in our warehouse and has been QA released, so stay tuned there. On the flip side, in terms of our G&A expense, you'll see that G&A expense growth of 48% lagged our sales growth, and that has been our approach over the last several years. As we've grown our business, we've kept an eye on the bottom line, and that's our mandate, is as we're growing our business, is to grow it profitably. So I just want to talk a little bit about earnings per share on the next slide. You'll see that in 2014 Q1, our fully diluted earnings per share were 4 cents. That compares to the year ago quarter of 2 cents. It's not quite as extreme as a doubling. There is rounding there because we do only report to the penny, but it is a significant move forward in terms of percentage, and gives you a good indication of the momentum of the business. Looking back over the last 12 months, so on a TTM basis, our earnings per share are 15 cents. And once again, I remind listeners that the first quarter is typically the softest of the year. So subsequent to quarter end, a couple of things worth mentioning. FeraMAX 150 set a record month in April. That's in contrast. It took us until May to set a record month last year. Our YTD April 30th, so that is the first 4 months of the year now taken in aggregate, Q1 plus the month of April, units are up 70% versus last year. We have, subsequent to the end of the quarter, received a further order from our first international customer, so that's now orders in consecutive quarters, which is a good sign of how they're making out in their market. And FeraMAX powder hit a record month. That's significant for us that we've got there within 9 months of launching the product. The first month or two always have a lot of pipelining in them, and for us to move past that that as a benchmark is significant for us. So April was a good month for FeraMAX powder, and a kind of a sign of what we believe are things to come on that brand. And then finally, Cathogel year-to-date numbers were up 70% versus the first 4 months of 2013. So kind of firing on all the pharma cylinders, and a sign of how the business is progressing in the second quarter. On the next slide is a recap of our product life cycle. Just gives you an indication of what phase we have products in, from in-licensing through maturity. And just a reminder to listeners that we have 3 products in the market today that I've been talking about over the last 10 minutes or so. We do have a gastrointestinal health product coming in the second quarter. That is a women's health product. Just to correct myself, we have a women's health product coming for launch in the second quarter of this year. We have a gastrointestinal health product in Q4 launch, and then we've got 2 products that are these are urgent care products that we've got that are in at Health Canada pending approval. That would make 3 products that are currently being planned for launch. So one of them is dependent on a Health Canada approval. We think the second approval, although it will come this year, will not be in time for us to put that product in the market. So we're expecting 3 product launches this year. Of course, one of those is dependent on a Health Canada approval. So I just want to remind you of some resources if you wanted to kind of keep an eye on our progress and what's happening on our business. You're welcome to visit BioSyent.com if you haven't already done so. All of our statutory filings are done at SEDAR.com. TMX Money is a good source of kind of up-to-date quotes. It's the TMX or TSX website, and there's good financial reporting there as well if you don't want to sift through the data that's at SEDAR. And of course, our product websites at feramax.com and cathogel.ca. I did want to mention before closing out that we will be presenting in New York City at the Markham Microcap Conference on May the 29th. And our annual general meeting is June the 10th here in Toronto, just across the street from our office. Details of that have been published on SEDAR and mailed out to shareholders. I think annual reports should be arriving and information circular should be arriving in shareholders' mailboxes imminently. And we will be putting press releases out for more information in that regard. So we look forward to reporting our continued progress, and I do appreciate very much your interest in our company and your continued support. Thank you very much.